The S&P 500 is having its best start to the year since 1987. The index has rallied nearly 18% in the past 4 months. You'd have to go back to December 2010 for the last time the rally was this good. What's certain is that these leeches, these crooked and evil parasites, the globalist cabal behind the Council of Foreign Relations, the Trilateral Commission, and the American Deep State and the Bilderberg Group are not happy that Trump's reign has been able to overcome all of these orchestrated attempts to impeach him. With data leaks, media powerhouses that have tried to discriminate him, and tax-exempt foundations like the one financed by Soros, which openly attempt to bring about one world government. What Trump is doing is taking a very calculated risk. If QE4 isn't announced and anything stops this recovery, the Fed is going down as the patsy, the guilty party, and the losers. If QE4 is announced and nothing happens, Trump will blame the Fed for waiting too long. If QE4 succeeds, he takes full credit. Make sure you get the full report on this now. wealthresearchgroup.com/take. Chris Hemke is Wealth Research Group's guest today, and he believes there's no solution. The reset is coming. Listen carefully.
Welcome to the Titans of Industry show. Today I got a first-time guest on, and we did a three-way with Keith Neumeyer a while back with Craig Hemke, but this is a standalone interview, just a one-on-one, because I want to have Craig Hemke of tfmetalsreports.com talk to me a little bit about everything that's going on with populism, the rise of socialism, sort of what's going on with the wealth tax, and even the billionaires wanting to get taxed more, and with President Trump looking to, demanding to get interest rates lower in order to stimulate GDP growth, nominal GDP growth. A lot of similarities with the 30s, with the 70s, and actually the late 60s, early 70s. And Craig Hemke runs TF Metals Report. It's a free website. There's also a paid subscription for a whopping $12 a month to get podcasts, daily analysis, a lot of stuff. He's been covering gold and silver and the manipulation for years and years. I'm glad to have him on the call. Craig, thank you very much for joining us.
Lior, it's a pleasure. I think this will be a lot of fun.
Sure. Well, let me start with asking you something that's not a lot of fun. There's been a lot of talk lately. Mainstream media obviously covers it, so somebody's paying somebody to get on the air. You got Ray Dalio, a multi-billionaire, arguably worth about $18 billion. You have Warren Buffett, third richest man in the world. You have Bill Gates. You have Larry Fink, a self-made billionaire, founded and runs BlackRock. And they're all talking about this thing called inclusive capitalism. And they say, look, capitalism is not perfect. We are capitalists. Capitalism is not perfect. It reaches a point now where we're either going to take a huge step back or we can take a quantum leap forward, in their opinion. And what they're looking for is to create a situation where the capitalistic system, especially in America, where they reside, and the country that made them, gave them the opportunity to be rich, they want to see a situation where more people are included in the system, in the capitalistic system. More people are given opportunity. Warren Buffett has more of an opinion that some people are not built for the capitalistic system, though they are born in the U.S. and they have great social skills. They can be great parents, they can be great employees, but they can never be rich using the capitalist system because they're either not competitive enough or whatever else is bringing them to that point. But he's saying, hey, that's no reason for them not to have a good life, and I owe my wealth to these people. And therefore, he's looking for to get them income tax credits. Ray Dalio is talking about giving them subsidies in other manners and about taxing the rich. Warren Buffett wants to tax the rich. Bill Gates is talking about universal income, along with Mark Zuckerberg. Larry Fink, like I said, billionaire, BlackRock founder, is talking about 50-50 salaries, men and women, getting more women into the workforce. A lot of things are changing, and it's all of this wealth gap. Now, the wealth gap wasn't created because of capitalism. It was created because of the central banks. And so
Right.
what I want to talk to you about is whether or not capitalism is broken or whether or not the fact that we have a central bank has led to this wealth gap. So, your thought about this, because this is a hot topic, and it's also hot because it's going to shape the next election cycle.
Sure. In multiple cycles to come, I suppose, Lior. Man, this is something we could talk about for hours, I would imagine. You touched upon the end root of the problem, though, and I don't think there's any doubt about it. It's the monetary policy. It's the central banks, their ability to create at the politicians' demand, if you will, unlimited fiat currency. We have this debt-based society, and it takes ever amounts of growing debt and growing currency to keep the whole Ponzi system running. So, you think about these guys, these industrialists, these entrepreneurs, whatever you want to call them, who've all benefited from this system. Well, the last thing they're probably going to do is recommend to, go back to some kind of sound money system, right? It's like the hypocrisy of always calling for higher taxes. Warren Buffett can talk about how, the tax rate, the personal income tax rate should be, whatever, but yet, all he does is shelter his income the best he can, right? And even his corporation pays something like maybe only 15% in taxes. I can't cite that for certain, but I just remember reading something like that in the past. So it's always, don't do as I do as I say, and that's typical of a wealthy business owner, or whether it's a politician. But at the end of the day, Lior, I wouldn't say it's capitalism that's broken. I would say it's the monetary system that's broken. And anyone can do this research on their own. In fact, I've seen a lot of charts. Perhaps maybe you can pull one up with this presentation that shows that the income disparity and the wealth disparity in this country really began in the early to mid 1970s. And that prior to that, through the post World War II and the baby boom and the 60s and all that kind of stuff, the lower income levels, the middle income levels, and the upper income levels were all sharing in the prosperity. Everybody was growing together. But it was beginning in the middle 70s that suddenly, we started moving toward this whole 1% story. And the primary reason for that is, I guess, when I look back at it, what happened in the early 1970s. That's when Nixon closed the gold window. The dollar was no longer stable in that regard. It was no longer sound money, and that it was no longer convertible into some fixed measure like an ounce of gold. Since then, the money supply has exploded. The value of the underlying currency has fallen sharply, and the cost of living has declined. The amount of taxes required to keep the system going has only gone up. And to me, it all stems back to this change in monetary policy that began in the 1970s. Now, I'm not going to sit here and try to tell you that going back to a gold standard or something like that fixes everything. But to me, I think sound money is critical if you're going to have a capitalistic system. And again, that's just something that I don't think you're going to hear Warren Buffett or Ray Dalio or anybody like that suggest that. And that's unfortunate.
Well, a few things that are very interesting is that, for example, Bridgewater, Ray Dalio, he is famous for saying, if you don't own gold, then you don't know your history. So I know that
Right.
Bridgewater is the 6th largest holder of GLD ETF. Buffett, on the flip side, he hates gold, but his error is that he compares gold to stocks, which is not the comparison.
Yeah.
Compare gold to other. Sorry?
Lior, I have to interrupt you too. I think that's funny that the guy is quoted as saying, if you don't own gold, you don't own history. And I would argue he doesn't even own gold. I mean, he's got shares of the GLD. And there are plenty of credible reasons, logical reasons to think that the GLD, while owning some gold, certainly doesn't own all of the gold they claim to hold. And at the same time, the only parties that can actually extract gold from the GLD vaults and the GLD inventory are the banks. So I just think it's, hypocritical, disingenuous, whatever you want to say, for Ray Dalio to say that about gold and then choose to own it in the form of GLD. Anyway, I digress. I apologize for interrupting you.
Sure. No, I assume obviously a billionaire like him has a stash of physical, but through Bridgewater, it's probably unconceivable for that kind of firm to have their own vault or anything like that. But who knows? I do want to tell you that with regards to Bridgewater, they just released a report in which they said that the wealth gap in the United States, pursuant to what you're saying, has started to accelerate in the late 70s, and they cite, among other things,
Exactly.
globalism. And they say that globalism has allowed U.S. companies an unfair competitive advantage. They have artificially raised their margins because what they did is move their assets without paying any taxes for it to other regions where businesses just cannot do that. If you are if you are a private individual, you have a factory in the States and you want to move that factory to another country, there's going to be all sorts of tax liabilities. But obviously these multinational companies have done that without any tax ramifications and without considering what's happened to the average guy, the middle class in America. They've just replaced them with slave labor countries that have zero regulations on them.
Right.
And now there's sort of a de-globalization. Companies are forced to come back to the States or forced to come back to the Western countries. The tax arbitrages are closing, and Bridgewater is arguing that U.S. companies will have a 40% decrease in their margins. In other words, a huge decrease in their valuations going forward because of de-globalization. And obviously, all these trade deals are a symptom of this. We've seen just recently a chart that the global trade is down to its lowest level since 2011, which was like the early part of the so-called recovery. I want to ask you, Craig, with this going on, with all these trade deals renegotiated, even the European Union is now renegotiating a trade deal with the United States. Do you see a situation where it's very much like the earliest part of the 20th century when the Federal Reserve was just born, when they called Europe an explosive barrel just waiting to erupt because of all of these deals that countries had with other countries, where if you touch me, then this partner will, and it looks like there's distrust between all countries, and therefore you see Russia hoarding gold. You see other countries that have never been huge gold hoarders starting to hoard gold. You don't see the average Westerner doing anything, but you do see all these central banks gearing up, very much like they did in the 30s before the war came, and very much like in the 60s when Charles de Gaulle wanted to audit the Fed in Washington. So I want to ask you, talk of a gold standard, there's nothing about it, but on the flip side, with the stock markets at all-time highs, you wouldn't expect the gold to be at 1280. You would expect it to be lower. And so I want to ask you, short term, there's a lot of, and interest rates are not zero anymore, etc. Gold is so strong comparative to what's going on in the regular economy. And I want to ask you, do you think that central banks understand that at some point during the next few months or year, when this thing goes into a recession, the blow up from all these people that don't even have $400 of savings for a medical emergency, like we see from these surveys, do you think that this is going to blow up in the face of politicians, and they're going to resort to dramatic measures? And obviously, how will that affect people that own precious metals?
Well, I guess on the surface, the easiest way for me to tie that together for you is where you kind of left off. The system now, if it's not at a breaking point, is quickly moving toward that breaking point. What I mean by that is it takes so much fiat money creation to keep the system going, so much ongoing liquidity. We've seen that when the stock market fell at the end of last year. I mean, all of a sudden the central banks had to reverse policies just to kind of re-liquefy everything and keep it going. You mentioned the average American not even having $400 in their savings account. All of this then leads you to this just what is really folly monetary theory called modern monetary theory, right? I'm sure, Lior, you've looked at that, which is basically, it's not even Keynesianism, which used to say you had to choose between guns or butter. Okay, this is now, we're going to have all the guns, all the butter, anything we want, because all we're going to do is print all the money that it takes to make that happen. And in the end, that destroys the system, right? Let me put it maybe on an even simpler, more straightforward level. The U.S. Federal annual budget now deficit is in excess of $1 trillion annually, and it's projected to be at that level really every year going forward. They say through 2029, but no one thinks that all of a sudden in 2030 it's going back down to zero. And again, you start compounding that annually, the growth of the accumulated debt, and then you look at the interest cost to service that debt, and you begin to see how the thing just grows exponentially. And you've got to then increase the money supply exponentially to keep covering those costs and your social welfare programs and your military programs, and everything goes with it. Okay, so anyway, there's a term, what I'm getting at is there's a terminal stage to this current system. And that is what some of these other central banks are preparing for. I've long said that when everything died, really, the wake-up call was in 2008. The Russians, the Chinese, you call all the BRICS countries, whatever, the dollar creditor nations were happy to play along in the system with the dollar as the reserve currency and everything based on debt and funny paper money. They were playing along just fine. Then all of a sudden, the whole thing just like ground to a halt within a matter of weeks, maybe months. And I think that the Chinese in particular looked around holding all of this US dollar denominated debt and went, wait a second, hold on just a minute. This is all at risk, obviously. This isn't, this isn't just going to go on indefinitely. If we can, if the US can put all this back together in the years ahead, then we ought to start maybe laying the foundation for the next monetary system. Not that we're going to flip the switch one time, just overnight and mess up everything, but the next time that everything collapses, the next time everything seizes up in the next great financial crisis, then maybe we'll have a new system to fall back upon. And I think the Chinese are preparing for that. I think the Russians are preparing that. I think all of the dollar creditor nations are in line to prepare for that. And as it ties back to the individual, I think the individual should be preparing for that as well, because you and I are dollar creditors. We save from all of our hard work. We pay our bills, and whatever's left over is savings, and we save in dollars. Just as these countries like China and Russia have their dollar reserves, we have dollar reserves. Well, if they are looking over the horizon, envisioning a time when the world kind of snaps back to some sound level money and starts over, maybe you and I and everybody else listening should look at it the same way and prepare for the next iteration of a global monetary system that invariably, like I said, snaps back to some sound money basis, and own some gold and silver ourselves with part of our reserves. So anyway, I'm sorry that's kind of a long answer. I'm not sure how well I answered as you laid it out, but frankly, that's how I see it, how this is all fitting together.
Something that you said that's important is, and I alluded to it earlier, if Warren Buffett would have compared gold to cash, Berkshire Hathaway's shareholders would be far, far richer, because he's holding about 120 billion in cash right now. If he had put half of that in gold at the turn of the century, 19 years ago, those people would sit on a cash position that's 5 times larger. The entire market cap of Berkshire Hathaway would have been larger. Just their gold position would have been worth $500 billion, because the gold has gone up 500%. So, it's that age-old debate. But the idea is you hold gold for the long term as a replacement for fiat currencies. And had you done that since 1971, when it started being free, you'd compound your money at 6.6%, and that's almost as good as stocks with far, far less exposure to the equities market. And I just don't see, anyone that is a detractor to that. I want to ask you this, Greg, because this is an important idea to touch upon. You talked about individual solutions, and I I understand that allocating a portion of your portfolio into gold and silver and some sort of a division between them, physical. Personally, what I've done is I've taken 2 years of lifestyle burn rate. So essentially, if I burn about 5K a month, for example, then you take 24 times that, so it's 120,000 for an example, and then you convert that fiat into precious metals, and you hold that in vaults in your premises, whatever you do. On top of that, you can speculate and add to that, or speculate with mining stocks, etc. But as a nation, let me ask you, what should a president do with tax dollars? Because obviously, doing whatever they're doing right now, all of these social programs, they don't have any return on investment. So as long as they keep collecting from these wonderful businesses, there are some wonderful entrepreneurs out there, small business and big business. You know, there's corruption, and there's corruption everywhere. Big business, small business, no matter what. But as a whole, you know, there are some fantastic people out there wrecking their brains every day, true capitalists, and they pay up their taxes, and the government levies up a lot of taxes every single year, about $1 trillion less than they spend, like you say. But man, if they could become more accountable and say, "Here, here's what we're going to spend on, and here's what it's going to do to our nation." So what we call accountable taxation, where they spend the money in the right way. What would be some of the things that you would do? Because you know, you should never say, "Hey, this is a lost cause, and we should not do anything." So if you had the option of doing something today, what would you start doing as the president? What would you do in order to change the situation? Because I think it's time to talk a little bit about solutions.
Oh gosh, Lior, I'm going to start by saying it is a lost cause, unfortunately, because you and I can have all these, you know, we can talk about interesting ideas, and I'll be happy to answer your question, but I'm afraid there's not much you and I can do, and I'm not sure there will be changes. You know, I'd say I've always been a believer, if you will, in that old Laffer curve. You know, Art Laffer's curve that he allegedly drew on a napkin. You know, that said at 100% tax rate, you basically get zero revenue because you're taxing every single dollar, right? And there's no private dollars because everything's going to taxes. And it's a 0% tax rate, you don't get any revenue. And so there's a point in the middle where it's maximized. The solution of just simply running taxes to 60% or 80%, that kind of thing, you're taxing so heavily everything, you know, beyond a certain level that it reduces the incentive to make any income past that certain level, right?
Sure.
So this idea,
a lot of unemployment as well, because the owner.
Yeah. So you can't tax a society into prosperity. I mean, it just doesn't work that way. And then we already have so many existing obligations, you know, whether they are Social Security or Medicaid or Medicare or the interest on the national debt that's already been accumulated, the military budget, all that kind of stuff. I mean, you get very small section of U.S. federal outlays that you can even touch, you know, much less, you know, try to spend. What was the word you used? Spend judiciously or whatever, you know, whatever it was you said. Anyway, I would. My point, I don't think it can be fixed at this point. I'm just afraid that the system as we know it spins so rapidly out of control that you can't really predict which events will follow. You know, we've already got a rather separated, divided nation along ethnic and financial lines. And with the power of the internet and the misinformation that's out there and disinformation that's out there, I'm just afraid the whole country is at least subject to being torn apart in multiple directions. And so I'm not certain. I don't mean to sound kind of doomsday-ish. I'm just not sure it can be fixed in its present form. And I would trace it all back to the decision that was made 40 some odd, almost 50 years ago to detach the financial system from some type of sound money basis. What we're seeing now is just the inevitable I guess the inevitable destruction that comes from that. I mean, it's just simple math, and that's sadly where we're headed. All I think anybody can do is protect themselves ahead of the changes that are coming. And, and then you get to the problem, Lior, you think, well, back in the 30s, you had confiscation of precious metal, or what if there's some type of confiscatory income tax or what are they, windfall profits tax that's put on everybody that owns precious metal. You have no idea how all this stuff can ultimately play out. But I'm just afraid, Lior, that who was it? Was it Tocqueville who diagnosed this problem, back in the early 19th century, perhaps, as he was traveling the early republic. And he said, once the majority gets the ability to vote themselves, the largesse of the minority, things are going to get out of hand. And that's really what we've gotten to at this point. And again, I don't mean to come off on a negative note, but to me, it's very hard for me to envision a peaceful, structured way out of it.
What do you think about the ratio between gold and silver right now? It's about 80, 83 to 1, hovering on that extreme side. It's only been visiting that, I think, 1991 and a few times in the past 30 years. It's a very extreme level. Usually when it reaches that, it starts to revert, go back to about 50 to 1. But what's interesting is that I've read recently a few analysis from some very reputable banks and brokers, etc. They even think that gold and silver would distance even further. And what they talk about is the demonetization of silver and the fact that its monetary use or its monetary demand as investment demand, as a hedge for crisis, is largely dependent on mom and pops, and they're largely out of the trauma of 2008, and so they don't see the big reason why silver would ever come back to 16 to 1, let alone even 40 or 51. But I want to get your take on this, because I don't see any change fundamentally. Nature has not changed the traits of silver. It has the same traits that the Ottoman Empire had when it used it as money, and it has the same traits as etc. Just want to get your take on this 80 to 1 ratio, and what do you think will happen going forward?
Well, I think it has something to do with what you said about silver is no longer considered a monetary metal. I suppose that's something to do with it. If somebody, say Mexico, is suddenly to proclaim, silver as money again, then okay, that would probably impact things. I think instead, though, Lior, and I've maintained this for years, I think that gold-silver ratio, which many people recognize historically as being, 16 to 1 or 9 to 1 or something like that, it was priced that way when the system was pricing an exchange of physical metal for currency. But now we don't price these things off of physical anymore. We price, let's talk about silver. We price silver, in this example, through the trading of these derivative contracts that have nothing to do with physical silver. You think about the COMEX, where price is determined on a daily basis. The contracts are issued by banks, which have no silver to deliver, and they're purchased by speculators, which have no intention of ever taking delivery. They're just simply, taking risk bets against each other. What the hell does that have to do with silver, with the underlying physical silver? Nothing. And so to me, that 83 to 1 gold-silver ratio is an indictment of the system, okay? The fact that we're not pricing things off of physical metal anymore, thus that's where we had the 15 or 16 to 1. We're now pricing it off the trading of these derivatives that have no connection to the physical metal at all. And so, the fact, like I said, it's not a monetary metal, okay, maybe that has something to do with it a little bit, but at the end of the day, if and when we finally get to the point where this current fraudulent pricing scheme finally breaks down, and it's been in place now since 1975, And whether or not gold and silver are remonetized or anything, if we just simply get back to where physical metal is physical metal, it's not unallocated, it's not rehypothecated, it's not, leveraged, it's not, a derivative. It's just simply the physical metal. If we get back to where they're both traded off of being physical metal, I suspect you'll see the gold and silver ratio go back to 15-1. But for now, the fact that it's out of whack, like I said, is just an indictment of the fraudulent nature of the current pricing scheme.
Craig, yeah, very interesting. And of course, with silver, I think what's very interesting is that it could have that sort of an overnight event where even one government says, hey, our central bank has started to accumulate silver again, and this thing gets remonetized and obviously revalued. But in closing, can you tell people a little bit about TF Metals Report? What can they find on the website and on your newsletter?
Well, the site itself was founded, almost 9 years ago. We kind of did it at the right time. Metals prices were soaring, and it was something everybody wanted to talk about. Then obviously now for the last 6 years, it's been mostly sideways in a trading range, and I think we've all aged about, what's dog years, like 7 years for every year, right? I feel like I've aged about 40 years since 2013. The site itself, we discuss the metals, we discuss geopolitics, we discuss macroeconomic stuff like you and I have talked about today, income inequality. As it links to geopolitics, I wrote something just last week about the U.S.'s blind support of the Saudis, and the reason that we support everything they do is because of our defense of the petrodollar and how vital that petrodollar recycling scheme, if that's a term people don't know, they should just look it up. Google petrodollar recycling scheme. You know what I'm talking about. Because that demand for dollars is so vital to keeping the U.S. dollar as the world's reserve currency, we turn a blind eye to all kinds of things. And again, at the end of the day, this all gets back to what you and I have spoken about in this podcast. And that's all part of what we talk about at TF Metals Report. For daily analysis, price thoughts, which way prices are trending, that kind of thing. I have a podcast and some stuff I write every day. Like you said, it's about 40 cents a day. So it's not, a bank breaker by any stretch of the imagination, but it's a great community. People from all political stripes, all of us trying to see our way through this madness and prepare for all these things that, that are ultimately coming that you and I have discussed today.
Craig, thank you very much. tfmetalsreports.com, and we'll definitely circle back in a few months.
Lior, it's a pleasure. Have a great day.
You too. Thank you.
The Treasury Department is projected to borrow in the April to June quarter alone a total of $30 billion. In 2019, Washington is on the path to borrowing $1 trillion after borrowing $1.2 trillion the year before. If you owned a business that just had its best year of sales in 10 years, yet it's still losing money, what would you feel this operation is worth? In the month of May, Wealth Research Group is going to feature some fantastic interviews, and you'll want to make sure you stay tuned. Also, check out the latest update on Trump's war with the Federal Reserve. Go to wealthresearchgroup.com/take immediately.